A new system is arising out of the BRICS and traded over Project Bridge, as we talked about, which is the cross-border payment system that is free of the SWIFT interference that Saudi Arabia has become a full participant in, that the Bank of International Settlements is backing. So the BIS, who reclassified gold tier 1, who told all the banks to bring their gold home and incentivize them all to buy it, is backing this new system. So where does it all go? I don't know, brother, but I think gold goes a whole hell of a lot higher than people think because it will be pegged to a new system. Silver is needed in military, in green, in industrial. And the thing of it is that when these exchanges for years, no one ever stood for delivery, ever, in the 140-year history of the LBMA, and since 1974 on the COMEX, less than 1% stood for delivery. That is how they're beating us. Let the West suppress the price. They're stupid. That's what they're saying. And in a coordinated fashion, slowly, not too fast. Remember that chart I showed you of the silver? It's been going for the last few years. They're just draining the exchanges using the stupid price on the West. But you can slowly see that Shanghai is now becoming more and more and more and more credible and has now outpaced COMEX. So at some point, when the Western prices, a system that can put oil at negative $40 a barrel in 2020, I mean, really? How the hell does that happen? Well, it's because it's the futures market controlling the price. And at some point, I think all of these countries across the globe say, we're done using the COMEX. It's a Ponzi scheme. Just like Bernie Madoff was the greatest thing in the world until he wasn't, that's what the COMEX and the LBMA is. When the LBMA can trade 2.9 billion ounces of silver per day, 3.5 times global mine supply, that's why their inventory has fallen off a cliff, because they're suppressing the shit out of it. And the rest of the world is now smart enough, coordinated enough, wealthy enough, cunning enough, and they're using that against us. They never were. Most of these countries were third world as far, 15, 20 years ago. And now all of a sudden they're wealthy, coordinated, sophisticated, and have the desire to stand on their own. And they do that by accumulating all the COMEX and the LBMA commodities using the suppressed prices that we have used forever. And they're using it against us. So this ends in a way where prices go a whole hell of a lot higher. When does that happen? Don't know. Should have happened a long time ago, but you can see the world is wise to what we're doing, and it's going to end.
Andy Schectman offers a sobering perspective on the strategic importance of silver and the global shift away from Western financial dominance. For years, silver has been a critical component in military, green energy, and industrial sectors. However, the West, particularly through the London Bullion Market Association, LBMA, and the COMEX, has suppressed silver prices by manipulating futures markets. This manipulation has created opportunities for other countries, particularly those in the East, to slowly drain silver from these exchanges at artificially low prices. Historically, silver has been underutilized as a monetary metal, despite its crucial role in various industries. For years, less than 1% of participants in the COMEX and LBMA futures markets stood for physical delivery of silver. This allowed Western financial institutions to suppress prices with relative ease. The strategy was simple: keep the price of silver artificially low through paper contracts, thereby controlling a critical resource without having to deliver the physical commodity. However, this manipulation has not gone unnoticed. Countries like China have become increasingly aware of the Western strategy and have begun to counter it. By slowly draining the physical silver from these exchanges, they are accumulating a significant portion of the world's silver reserves. The Shanghai Gold Exchange, SGE, has already surpassed the COMEX in terms of trading volume, signaling a shift in the global financial landscape. The SGE's rise marks a critical turning point. As the West continues to suppress silver prices, the East is capitalizing on these low prices to build up their reserves. This accumulation of physical silver will eventually give these countries a strategic advantage, particularly in industries that are heavily reliant on silver, such as electronics and renewable energy. Schectman argues that this situation mirrors the collapse of other financial schemes, such as Bernie Madoff's Ponzi scheme. The COMEX and LBMA have been able to maintain their control over silver prices for decades, but this control is beginning to wane. As more countries recognize the value of physical silver, they will increasingly move away from Western financial systems, leaving the COMEX and LBMA vulnerable. The manipulation of silver prices is not unique. The futures market has also had a significant impact on other commodities, most notably oil. In 2020, oil prices briefly turned negative, an event that baffled many observers. This anomaly was a result of futures market manipulation, where the price of oil was dictated by speculative trading rather than actual supply and demand. At some point, Schectman argues, countries around the world will abandon the COMEX and LBMA as they recognize these markets for what they are: Ponzi schemes. When this happens, the price of silver and other commodities will skyrocket as the true value of these resources is realized. Meanwhile, the West is drowning in debt. The United States is creating $100,000 of debt every second, contributing to a nearly $200 trillion in funded and unfunded liabilities. This level of debt is unsustainable and will eventually lead to the collapse of the current financial system. As Western countries like the UK and the US sell their treasuries to one another to keep the lights on, they are merely delaying the inevitable. The sale of treasuries to countries like the UK, which is also economically weak, underscores the fragility of the current system. This debt-fueled economy is built on a house of cards, and when it collapses, the ramifications will be global. As Western countries continue to accumulate debt, BRICS nations are moving in the opposite direction. By selling US treasuries and using the proceeds to buy gold, these countries are positioning themselves for the future. The creation of a new currency, tentatively known as the unit, backed 40% by gold, is a clear indication of this shift. The unit will be traded over the bridge system, which is free from the interference of SWIFT and other Western financial systems. Gold's reclassification as a Tier 1 asset by the Bank for International Settlements, BIS, is another indicator of its growing importance in the global financial system. This reclassification has prompted a massive buying spree among central banks, particularly in BRICS nations. These countries are not only buying gold, but also repatriating their existing gold reserves from Western vaults, further distancing themselves from the Western financial system.
We're selling our treasuries. We're broke. We're insolvent. We're creating $100,000 of debt every second. 1, 2, 3, 4, 5, 6. Keep on going and don't stop. And you'll get to $1 trillion in 100 days. That's how much debt that we are. Well, you won't because, yeah, you will. Because a trillion seconds ago is 31,688 years ago. I guess I haven't divided that by 100,000, but it should be somewhere near 100 days. And that's how much debt we're creating on top of the nearly 200 trillion that we already have in funded and in unfunded liabilities. So we're selling our treasuries to like the United Kingdom. And the UK is a broke country as well. Neither of us have manufacturing capabilities. Neither of us have much in the way of these natural resources that we need or the ability to exploit them and refine them. So we sell our treasuries to the UK, one broke nation selling it to another broke nation who pays us just so we can pay the interest on the debt we already have in existence to keep the lights on, and then take the rest and send it to the BRICS nations to buy commodities, who in turn are selling treasuries that they used to put all their reserves into and taking those dollars and buying gold, which we just found out. What did we talk about last time we were together? The new unit currency, which will be traded over the bridge, which is 40% gold backing, physical gold held within their own borders. And if you look at the white paper on the unit, the gold is held within the borders of the country that creates the unit token. In other words, it's independently audited, but not sent to a place like Moscow or Beijing. It's held by the countries that make the unit tokens, and it's deliverable. So gold will be part of a new system. Gold is the only other Tier 1 asset. And look at the countries. I have a list of it right here. The countries that have in the past year and a half, most of them recently, taken possession of gold, taken possession. So it's one thing, see, all of these countries have left their gold at the Bank of England and the New York Fed, which gave them immediate access to the COMEX in New York and the LBMA in London. And you keep in the Bank of England, the New York Fed, you have stable jurisdictions and Western rule of law. And now, over the last 100 days, the combined volume of the Shanghai gold market and the futures market, both, gold market is cash and carry. They have a small futures market. It has gone up by over 200% and is now surpassed the COMEX market in terms of volume. It's now the number 2 heaviest traded volume in the world for precious metals. But so you got all of these countries that are buying gold hand over fist. And then the most important part is Germany, Austria, Slovakia, Argentina, the Netherlands, Saudi Arabia, Hungary, Belgium, Egypt, Senegal, Romania, Nigeria, Poland, Ghana, India, who bought 1.5 times the amount of gold they bought all of last year, which is a record year just in the first 4 months of this year, brought it home along with 100 metric tons they've held at the Bank of England since 1991. Turkey, France, Serbia, Venezuela, Algeria, Cameroon, South Africa, Czechoslovakia, just to name about 30. There's more. They're all repatriating their gold and buying gold because they know it will be part of a new system. Why did the BIS reclassify gold as the world's only other tier 1 asset? Because it's going to be something that is very important about what comes next. They wouldn't have done it otherwise. Between the reclassification, the massive central bank buying spree, and the repatriation, taking it away from where it was always kept because it gives access to the Western system, who now has lost all of their trust, and a new system is arising out of the BRICS and traded over Project Bridge, as we talked about, which is the cross-border payment system that is free of the SWIFT interference that Saudi Arabia has become a full participant in, that the Bank of International Settlements is backing. So the BIS, who reclassified gold tier 1, who told all the banks to bring their gold home and incentivize them all to buy it, is backing this new system. So where does it all go? I don't know, brother, but I think gold goes a whole hell of a lot higher than people think because it will be pegged to a new system.
As the global financial system begins to shift, BRICS nations are leading the charge in accumulating gold. Countries like China, India, and Russia have been steadily increasing their gold reserves, recognizing its importance in a future financial system that may no longer be dominated by the US dollar. The creation of a new currency, the unit, backed 40% by gold, is a clear indication of this strategy. This currency will be traded over the bridge system, which is independent of Western financial systems like SWIFT. The strategic accumulation of gold by BRICS nations is a response to the growing instability in the global financial system. As Western countries continue to accumulate debt, BRICS nations are moving in the opposite direction, building up their reserves of tangible assets like gold. This strategy not only provides a hedge against the devaluation of fiat currencies, but also positions these countries as leaders in the emerging global financial order. A key component of this strategy is the repatriation of gold reserves. Historically, many countries kept their gold in vaults located in Western nations like the United States and the United Kingdom. However, in recent years, there has been a significant movement to bring these reserves back home. Countries like Germany, Austria, Slovakia, and Hungary have all repatriated their gold, signaling a growing distrust of Western financial institutions. The repatriation of gold is not just a symbolic gesture, it is a strategic move to ensure that these countries have direct control over their gold reserves. This control is critical as the global financial system continues to evolve. In a world where trust in Western financial institutions is waning, having physical control over gold reserves provides a level of security that cannot be matched by paper assets. Gold's reclassification as a Tier 1 asset by the BIS is a clear indication that it will play a central role in the new financial system. This reclassification has prompted a massive buying spree among central banks, particularly in BRICS nations. These countries are not only buying gold, but also repatriating their existing gold reserves from Western vaults, further distancing themselves from the Western financial system. The new financial system that is emerging will likely be based on tangible assets like gold, rather than the fiat currencies that have dominated the global economy for the past century. This shift will have significant implications for the global economy, particularly for countries that are heavily reliant on fiat currencies. As BRICS nations build up their reserves of gold, Western countries continue to accumulate unsustainable levels of debt. The United States in particular is creating $100,000 of debt every second, contributing to a nearly $200 trillion in funded and unfunded liabilities. This level of debt is unsustainable and will eventually lead to the collapse of the current financial system. The sale of treasuries to countries like the UK, which is also economically weak, underscores the fragility of the current system. This debt-fueled economy is built on a house of cards, and when it collapses, the ramifications will be global. While gold often takes the spotlight, silver will also play a crucial role in the new financial system. Silver is a critical component in military, green energy, and industrial sectors, making it a valuable asset for countries looking to secure their economic future. The strategic accumulation of silver by BRICS nations is a clear indication that it will play a central role in the emerging global economy. The manipulation of silver prices by Western financial institutions has created opportunities for countries like China to build up their reserves at low prices. As these countries continue to accumulate silver, they are positioning themselves for a future where silver plays a central role in the global economy. The future of the global financial system will likely be based on tangible assets like gold and silver, rather than the fiat currencies that have dominated the global economy for the past century. This shift will have significant implications for the global economy, particularly for countries that are heavily reliant on fiat currencies. As Western countries continue to accumulate debt, they will become increasingly vulnerable to economic shocks. In contrast, countries that have built up their reserves of gold and silver will be better positioned to weather these storms. For individual investors, the current economic landscape underscores the importance of diversifying portfolios with physical gold and silver. These metals provide a reliable store of value, protecting against the devaluation of fiat currencies. Investing in gold and silver also aligns with the strategies of central banks and major economies, which are increasing their reserves of these precious metals. Investors should consider purchasing physical gold and silver, as well as exploring investment vehicles that are backed by these metals. Staying informed about global economic trends and understanding the strategic importance of gold and silver are crucial for making well-informed investment decisions. In conclusion, the strategic accumulation of gold and silver by BRICS nations marks a significant shift in the global financial landscape. As Western countries continue to accumulate unsustainable levels of debt, the East is positioning itself for a future where tangible assets like gold and silver play a central role in the global economy. For investors, understanding these dynamics is crucial for making informed decisions about wealth preservation and growth. For American and allied citizens, recognizing the strategic importance of gold and silver in preserving national economic security is crucial. As global economic dynamics shift and fiat currencies face increasing pressure, these precious metals provide a reliable foundation for wealth preservation. By investing in gold and silver, you not only protect your financial future, but also contribute to the broader goal of economic stability and resilience. Stay informed, take proactive steps, and ensure that your investment strategy includes these timeless assets. In a world of uncertainty, gold and silver offer a beacon of stability and security.
Stay informed about the latest developments shaping the precious metals market with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today. Link in the description.